tonight's session. Recording in progress. Well, listen, I think that's our sign to kick off. Well, good evening, everybody, and a huge welcome to today's panel discussion hosted by GAIN. And tonight we'll provide some insight into what we mean when we actually talk about careers in investment management. And my name is Marie Fleurbaaij, and I'll be moderating today's discussion. So a huge thanks from me to all of you for joining tonight. Over the next hour or so, I'll give you a very quick introduction to myself and into GAIN before introducing our very talented panelists. So very briefly, I'm the, I should say there's a poll that you'll be seeing as participants, and it'd be really wonderful if you wouldn't mind filling it in as we go. But over the course of the next hour, I should say that I am the managing director of the Cambridge University Endowment Fund, where I have the great privilege of investing on behalf of one of the best universities in the world. In addition to that, I'm also one of the co-founders of GAIN. Some of you may be familiar with GAIN as an organization, but for those of you who are not, our aim is to inform and inspire young women about the great highlights and the great excitement that comes with being an investor, being a professional investor. I personally think it's one of the most interesting and rewarding career opportunities out there. And I hope that after this hour and meeting our fantastic panelists and speaking with them, you'll have gotten a flavor for why and agree with me. We are incredibly keen to get a lot of audience participation tonight. So please do ask questions via the chat function or via the Q&A function, and I'll do my best to fold those into the conversation as we go. Now, without any delay, I wanted to introduce our panel. We have four incredibly talented and interesting women with me tonight. And we're joined by Niamh, Brodie-Machura, Sherry, Ngai, Lottie Meggitt, and Devaki Muthiah. And before getting deep into the topic of investment management, I thought it'd be really helpful if you would all spend just a couple minutes kicking off with a little bit of background about yourself and what you do. And so Niamh, maybe you could just start by giving a little introduction to yourself, what you do, and maybe a bit of an example of what a typical day looks like for you, please.
Sure. All right. Thanks, Marie. Hi, everybody. I'm Niamh. I'm the Managing Director of Equity Research for Fidelity Investments in London, and I'm a co-portfolio manager of some funds for Fidelity, including Enduring Opportunities and the Disruptive suite of funds. So they're kind of really titles. What I do on an ongoing basis and what the team does is we're equity investors. So that means we analyze stocks looking for the best equity opportunities for our fund holders. And our fund holders are people who might be planning for their retirement or planning to save some money to educate their children. And we know that they're relying on us to invest wisely for them and give them a good outcome. And that's what we aim to do every single day. So what does a typical day look like? So I get up relatively early and check market information and any updates from the analyst team on stock recommendations. And then I'll walk away from the screen and do exactly what millions of other working parents in the UK do, which is help my kids get ready for school, and I'll check they have their kits and send them off to start their day. So that's how it starts. So at 9 a.m. then we have our trading call. And after that, my day is all about talking to the team in London, colleagues in Boston and Hong Kong. And the core of what we're trying to do is understand industries and understand the company's prospects and gauge what it's worth now and what it can be worth in future. So that's the core of what we do. So that means crunching numbers, but it also means talking to company management, industry experts, suppliers, customers. All of these are a really vital part of what we do when we try to understand a company's prospects of sustainable value creation. And pre-pandemic, we used to do a lot of field work, which was great. We used to actually go out and kick the tires, as they say, and visit companies on their home turf and see kind of product demos and factories. And we're all really looking forward to getting back to that. And then last but not least, another important part of the day is the connection between all of that investment analysis and the investments that actually go into the funds. And those connections happen through regular local and global investment meetings. So in those meetings, we discuss the sector prospects and we debate stock ideas. So that's what makes up most of my working day before I shut off the screen again and go back to my family. So.
Great. No, that's a fantastic, that's some wonderful color. Thanks so much for sharing that. Sherry, how about you? Does your day kind of sound a little bit similar to what Niamh's described? I think it'd be great to hear from you. Well, it'd be great to hear a little bit of an introduction to yourself and what you do.
Sure. Thanks, Anne-Marie, and thanks, Niamh. Different from Niamh, where she invests in basically equities. I invest in another class of assets called venture capital. Essentially, they are private companies at different stages. So a little bit of background of myself. I'm Sherry. I'm currently in London for several months for personal reasons, but I've always been working in Hong Kong. And a little bit of time in Singapore as well. I started off my background in commercial bank and then moved on to join a few fintech and insurtech startups where I was a very early member or co-founding member. And I got very hands-on experience of, working, starting, fundraising for a startup. It's that sort of experience actually, helped me to turn to actually change my career to the other side of the world, where I now became an investor, investing in those startups. So I'm right now working for HKSTB Ventures, Hong Kong Science and Technology Park Venture Fund, where we essentially invest in early stage technology companies across Asia. We manage money, basically a lot of them from the government, but also from our own balance sheet as well. This is similar to most of the venture capital funds as well. They basically manage money from private investors, their own balance sheet, or the government. So what a typical day for me or for most of the venture capitalists will be, I would say 1/3 of my time would be looking at new investments, sourcing new investments, evaluating new investments, essentially, which are, again, early stage companies. And it could be a team with 10 people who are working out from their garage to, pre-IPO biotech companies, inventing really, revolutionary surgical devices, etc. And that will be 1/3 of my time evaluating these investment opportunities. The other 1/3 of my time, it will be, learning, meeting new people, meeting people in the community, either founders, other venture capitalists, technology experts to understand what are the recent technology trends. And then another 1/3 of my time, it will be managing our portfolio. So usually VCs, we don't have a very, very large portfolio. At max, you would have 10-ish to 20 private companies, investees under your portfolio. And a lot of the time, you're really close to the founders, you build relationship with the founders, you work with them together, you help them to excel, you help them to create value, you help them to hire people, business development, fundraising, and eventually you help them to exit. And that's your common goal. And of course, a lot of the time it will be troubleshooting, but it's kind of a fun experience. And then this is my most enjoyable part of being a VC, working with the founders, working with our portfolio companies.
Great.
Yeah.
Well, I'm really, we'll unpack that a lot more, hopefully, over the course of the next hour. I think that sounds really interesting. And Lottie, before we come back to Sherry and unpick that a bit more, I'd love to hear from Lottie. Lottie, maybe you can give us a little bit of an introduction to yourself, what you do, and maybe some insight into what your day looks like.
Sure. Hi, everyone. My name's Lottie Meggitt. I'm an ESG analyst at Independent Franchise Partners. ESG stands for Environmental, Social, and Governance, and I'll explain exactly what that means in a second. Independent Franchise Partners is an asset manager, and we invest in mid to large cap, publicly listed global equities. So the types of companies that we're investing in tend to be a bit older and more mature and established than the types of companies that Sherry is looking at. So I'm an ESG analyst. What does that mean? Essentially, my role is to help the investment team understand the environmental, social, and governance risks that impact the companies that we invest in. To give you some examples of what that might be, I'm currently doing some work on a company called Nestle, which I'm sure you'll have heard of. And some of the issues I'm doing research into there are looking at how climate change might impact how they source their commodities like cocoa and coffee. And also whether the products that they produce are meeting the health expectations of consumers, and whether we could see more further sugar related or health regulation that could impact what they sell. So those are the types of issues I'm looking at. The way my day is split, and the vast majority of my time I spend doing research, that research involves looking at data, so things like carbon emissions, how much water a company uses, how much plastic and waste it produces, but also there's a big qualitative component to that too. So reading about the types of programs that a company has, thinking about, are they sufficient, reading commentary on likely regulation that could come in, consumer trends in health, lots of things like that. And then another big component of the role is engagement, and this is personally my favorite bit of the role. And that's where, through our research, if we've identified that a company isn't managing a risk well enough. So for example, let's say we don't think that its plans to reduce emissions potentially leaves them exposed to regulatory risks or carbon taxes. That's where we engage with the company, and we make the business case for them to do better and try and get them to change. And personally, that's an incredibly satisfying bit of the role when you start seeing progress in those areas. And then a final part, and this is one of the reasons I chose ESG rather than a more mainstream financial role, is a big part of what I do is talking to clients and understanding the things that clients are concerned about and telling them what we're doing on those ESG issues that's front of mind for clients.
Yeah, great. Wow, that's some fantastic insight. Thanks, Lottie. Really, really wonderful, colorful examples, and gives really proper view into your day. So thanks for sharing that. And finally, and last but not least, Devaki, maybe we could hear a little bit about you and your bit of an intro to you background and what your typical day looks like.
Yeah, sure. Thanks, Anne-Marie. So my name's Devaki. I work for Alvarium. It's a global multi-family office in London, and I work for the investment advisory arm. I'm a senior analyst on the team. Basically, what we do in our investment advisory team is we put the money of ultra high net worth clients to work. We're trying to either preserve their capital or grow it over time. And we mostly identify opportunities in equity markets through mutual funds or ETFs. And we are doing both the research and the client service delivery side. So a typical day for me, my role is split into two. I'm either doing client service work or I'm doing trade execution. I would say the trade execution takes up most of my day, and it's the most risky and stressful part of the day, because you're actually dealing with the physical money of the clients. And it requires a lot of concentration. So I tend to start my day with that because I work best in the morning. And then I spend the afternoon working on reports or at client meetings, or producing analysis for clients. And then I spend a bit of the evening doing more deal execution just to finish off the day. But yeah, that would be a basic day for me. We do a lot of research at our firm as well, into different mutual funds. We analyze managers and how they're able to outperform their benchmarks and their peer groups. We have a dedicated research team. I don't work on the research team per se, but I'm quite involved as well with the research and providing it to our clients, and in the best way putting forward our opportunities.
Oh, great. Thank you. For people on a lot of these concepts that we've talked about, and I'm hoping we'll unpick, but I wondered if you could just really briefly explain what you mean by trade execution for somebody who's never heard that phrase before.
Yeah, sure. So our business is advisory, mostly advisory, which means we give opportunities and ideas to our clients, and they approve these ideas. Once they approve these ideas, these are essentially trades, and we have to place these trades for them on the market or through a platform. Examples of platforms are Hargreaves Lansdown, which you will commonly know. Others include AXA, Pershing, Standard Life, etc. So we use these platforms to then place the trades for clients, and they hold accounts on these platforms, which they can then have a look at every day and see how their investments are growing. Alternatively, we also place investments through the open market, which requires us to work daily with dealers who will execute through the stock exchange.
Great. Perfect. That's fantastic. I think that's really helpful. Wonderful. Thank you all so much for that. Now, before we kind of go on a little bit further, what I'd love to talk about with the four of you now, and just laying a bit more groundwork for us to build upon, is to understand how you all got to where you are today. Now, and I think, Niamh, I'll start with you. You studied investments and treasury and as a master's degree, and you got an economics degree at undergraduate level. Maybe you could talk about how you got into that. Did you always want to be in investment management, or how did you learn about it as a career?
Thanks, Anne-Marie. I mean, the simple answer is yes, since I was quite young. So in Fidelity, we've investors who came to it pretty early and others who came to it much later in their life or their career. And I'm probably more the former. And it was out of interest and curiosity, effectively. So I always just like to watch the news when I was a kid. And I remember the 1987 stock market crash, Black Monday, and I didn't understand it at all. I mean, I had no idea what was going on, but I understood from the tone that the news reporters were using and the number of impacts they were talking about in terms of people's mortgages, people's savings, people's jobs. I understood that it mattered, that markets mattered. So I tried a lot of different subjects in school, and I liked economics. So I said, okay, we'll try for that in university. And then investment topics were the ones that I really loved the most. And they were the ones where you got the book and actually you'd stay up reading until the wee hours. I kind of loved it and never looked back. But you know, the one thing I would say is that I work with colleagues who have degrees in history, in theology, in chemistry, who had completely different careers and changed their minds. And now we're all on the same path, and we're all passionate about what we do and all trying to do the best job that we can for our customers. So I have my particular journey, but there are an awful lot of different journeys to get to the same path. So
no, that's great, and actually that dovetails really well into my next question, which is for Lottie. Lottie, I think you had a very different experience, and I don't think your background's not what I would call a traditional finance background, like what Niamh's described. So maybe you could give your own thoughts on how you came into this role.
Yeah, of course. And I think if you leave with one message from this, from me, it's that, well, I'll do two messages. One is that your background doesn't matter, and two, like, take opportunities as they come. So to tell you how I got into my role, I had never even heard of finance at school. At school, I studied languages, and then at university, I did a classics degree. I spent all of my university career wanting to be a journalist, like very similar to Niamh. I loved watching the news. I loved researching topics and writing essays about them and putting forward an opinion. So I was dead set on being a journalist. And then kind of life doesn't go exactly how you plan. I did an internship on a national newspaper, got a very quick shock that that's actually not what being a journalist is. You don't really get to read the interesting things that you want to do and write about them persuasively. So then I started thinking about what else was an option. And I was in a rowing club at the time. That rowing club was sponsored by an investment manager. And just as I was thinking about graduating and maybe applying to a postgraduate course, because I still didn't know what I wanted to do, a job, a graduate role came around the boat club looking for someone to go and work in the marketing team doing a communications role. I looked at the job description. It was they were looking for someone with kind of journalistic aspirations who had those research skills, really enjoyed writing and communicating. And I'm so glad I took it. And I thought, why not? Applied and got the role. And it was a fantastic kind of 2-year exposure to the world of finance. And because I got that, the expression is always, I got that foot in the door. I got to see what kind of roles there were in the industry, and then moved internally into the ESG team. But I know that had I not said yes to that role, which was far from what I ever thought I would end up doing, I would never have had that opportunity. So really be open, I'd say, in your career. And there's a lot to be said for taking those opportunities that may not seem ideal, and then like working really hard, looking around, and then moving internally if that's an option.
That's so great, and couldn't have been further away from the Niamh's experience. But like Niamh pointed out, that she's working alongside a lot of people with a wide variety of backgrounds. Sherry, how about? Sorry, I was going to actually go to Devaki and ask Devaki. Devaki, what do you think about what Niamh and Lottie have both said? Is that different from your experience? I think you studied finance at university, isn't that correct?
I actually studied business, so
okay.
A bit more in line with the investment management industry. But funnily enough, when I was a student, I had no idea that this was a career. I just knew that there was banks, and you could work in M&A or transactional services or investment banking, etc. And I knew those hours were long, and it seemed quite a man's world, so it wasn't very attractive to me. And I wanted to be more in the client service side. I did like the research aspect, but I wanted to have those interpersonal skills with clients. And when I started my job at Alvarium, at the time it was called something else, I learned that this was actually a career, and I started looking more into it and different companies that did it. And honestly, I wish I knew more in the beginning, and I wish I had researched more when I was a student. But so slightly different from Niamh and Lottie, that I did have a traditional background, but funnily enough, I had no idea about the industry. But I think it's so important that you take the opportunity to read more into the different types of jobs that are out there and available, because you'll be surprised to know that something within the finance industry doesn't necessarily have to be a numbers game all the time. You can actually use those interpersonal skills.
I think that's such an important distinction. What you draw is, I think there's a real common, and one of the key messages that we at GAIN try to address or get across is there is this common misperception that investment banking and investment management are the same thing, and they're really at very different parts of the finance industry, and I wouldn't say they necessarily require different skill sets, but they definitely are completely different roles. So thanks for drawing that out. And finally, Sherry, how about you? And how did you get your first job? You said you started in commercial banking. So again, was finance always something that you wanted to do, or how did you find your way to investment management?
Sure. So my dream had always been becoming a clinical psychologist.
Right.
completely different thing. That's why I studied psychology. But after 4 years of studying psychology, the only thing that I know that I do not want to do is as a clinical psychologist. But then there are a lot of things that I don't know what I should do. So, but again, like opportunities popped up. I just tried out different things. The only thing that I know when I wanted to be a psychologist was that, I love listening to other people's stories. I love understanding, their background, their stories, hearing their stories, and talking to people generally. So I tried out different things. I joined banks, I've worked in startups, and then I landed my job in VC, which essentially is something that I really like right now because very interestingly, working in a venture capital fund, you get a lot of time talking to the entrepreneurs and listening to their stories, understanding their backgrounds. So right now I'm doing what I love, but in a very, very different industry that I have never thought of before. And one insight that I had is that venture capital is a very interesting thing. A lot of the people, that I'm working with right now, they don't come from there's no standard path. All of them come from very, very diverse background, either, educational background or working experiences. They either come from traditional finance background or startups or just like anything, as long as they have that passion with entrepreneurs or with technologies. We actually hire a lot of people. We want to hire a lot of people who come from like a science background, STEM background, because they understand the technology more than ourselves. But of course, diverse background is something that we value a lot. But yeah, so to conclude, I really like other panelists, what other panelists have shared. We never know what our path is, but then opportunities came up and we grabbed the opportunities, and then now we land our job.
Oh, that's great. Thank you. Thanks for that. And now we're about halfway through the session for tonight, and I just want to remind the audience to please do submit your questions. I would be really delighted to pose them to the panel, so please don't be shy. Otherwise, you'll have to listen to me ask questions all night, and I'd rather address your issues and your questions. But in the absence of any Q&A from the audience yet, I'll keep going. And so, Niamh, we've spent a little bit of time talking about public equity, and Sherry's given a little bit of insight into the difference between public equity and VC. Maybe you could give us some color on how you're actually doing due diligence on any investments that you're investing in. It would be great to, and then maybe we can compare and contrast that with what Sherry's doing. Okay,
sure. We've got a lot of different resources that kind of come together on the recommendation on an individual stock. So infidelity analysts have individual assignments. So that means they have maybe 20 different companies that are assigned to them, and they will start with the institutional knowledge that we have in the firm about that company. So all of the notes that have been written through time, and then checking in with colleagues what they know about the company right now. So that's the kind of, absorbing the history. And then they'll get input from colleagues. We have a corporate governance team, we have a proxy voting team, and they will give guidance on how the company is being managed. We have a forensic accounting team. They will, give indications on whether the reported numbers look reliable and solid or not. And then it really comes down to the analysts and the due diligence that they do. And normally that means speaking to management, experts, suppliers, competitors, customers, and then coming to a view by putting together a financial model on how this company's prospects on a go-forward basis can look. The kind of additional remark I would make there is that there's no perfect analysis. There is no right answer in this industry, the same as there is no right answer for a weather forecaster. So we're in a world of imperfect information because we're trying to value the future earnings and the future cash flows. So what every analyst does is tries to make an informed decision based on the information right now on how the prospects will look on a go forward basis, and they do it diligently and they do it prudently. But we know that we're trying to get it right most of the time, but we can never get it right all of the time.
No, that's wonderful. Thank you for sharing that. Sherry, how about, I mean, Niamh is talking about a global platform, a global research product, you know, with teams all over the world that are collaborating on themes and individual stock ideas and on portfolio construction. I'm imagining that's a very different experience from you at a VC level. So can you describe a little bit of what the team looks like and how you work together to do some due diligence?
Sure. So in a typical venture capital fund, we usually operate in a very lean mode. Usually the team won't be more than 10 people. Again, usually a fund will manage less than 20-ish portfolio companies. And the investment mandate is usually very driven by our investors and our general partners. Again, different funds, they will have different specialized technology or different investment mandates. Some of them, they may focus on biotech, health tech companies. Some of them, they may have their strengths in fintech, insurtech. Some of them, they may have their strengths in other technology areas. So it really depends on, the investment focus of the fund. VC I would say is one of the most riskiest asset class, again, compared to equities. Usually, because it's the most risky class, the fund usually target for like a 30-ish% internal rate of return. And it's very, very high risk, high return, that sort of asset.
Maybe you could just give some, sorry to interrupt you, Sherry, but I think that's a really important distinction. Maybe could you give, just for the audience, give a quick sense of, if you were to make 10 investments, you talked about portfolios of 10 to 15 names.
Yeah.
Let's just keep it easy. If you were to make 10 investments,
sure,
how many of them would you expect to be very successful investments? How many would you expect to be okay investments? And how many investments, explain a little bit about what your hit ratio might look like.
Yeah, that's a very good question. In short, 1 out of 10. 1 out of 10 will be our home run. Looking for 50 to 100x of return. So everyone wants to invest in the next Facebook, next Alibaba, next Grab, if you're familiar with Grab. And we look for that particular, home run to cover all our losses. We essentially, maybe like out of 10, 1 will be home run, 2 to 3 to 4 would be, social companies, 1x return, and the rest, we understand, early companies, they will fail. So those will be the failed ones. So again, a very risky class, but it's a very different from when you evaluate equities, where you have, very systematic approach, framework, methodology. We in venture capital, we also have that sort of methodology as well, but I would say it's a science mixed art. So we also have the human side where, we exercise personal judgment. So.
No, that's great. Wonderful. Thank you. Thank you so much. We're getting some great questions from the audience. So thanks so much, everybody, for your submissions so far. I've got 2 questions I'm going to combine into one. And somebody, and I'm going to ask Devaki for your insights to start with. And so someone's asking, how you can stay current or find out more and stay on top of stay on top of markets. What would you suggest to somebody who wants to learn the vocabulary, and then hopefully ultimately answer the question in an interview of why are you interested in investment management? You touched on the point earlier that investment banking and investment management you originally thought were the same thing. So it's a 2-pronged question, but maybe you could give it a go, and then I can see how the other panelists fare.
Sure. So on the first aspect, how do you kind of keep up to date with what's going on in the markets and your vocabulary? I listen to some really good podcasts that I can recommend. One is called Planet Money. And they
just to be clear, it's Planet Money. Is that right?
Money, yeah, Planet Money. And another one is called Motley Fool Money. Both are American podcasts, so a little bit US centric, but still relatable. Planet Money often talks about isolated events that have happened in finance or things that are happening currently in the market, and they focus the entire episode on that. So it's great if you want to get a bit more background on a certain financial event or something that's going on, like a trend. Motley Fool Money happens weekly as well, and they give market updates and company updates. So if you're looking to hear more about stocks that you're interested in or companies you're interested in, that would be a good one to listen to. Of course, there's a large variety of books out there for you to read. I can't think of any right now. And there's always new ones. So I would look out in the investing section, but there's tons of books out there if you're looking for definitions and vocabulary. But I always think podcasts are more current, especially when you're a university student, you want something on the go. Then moving on to the second part of the question, which was the difference between investment management and investment banking. So I would have said, from my perspective, investment banking is more in a commercial environment, whereas when you're in investment management, you can even be in a boutique firm of just 50 people. So it can be much more small scale. You do have your big investment management firms and your big wealth advisors, but if you're the type of person who likes working in a smaller team, more normal working hours, that would be the main difference, in my opinion. But if you're in an interview and you were asked why choose investment management, I personally think that with investment management, you know your end client. Often or not, they are individuals, and you are helping them to reach their objectives with their money, be it capital preservation. You know, maybe they're an older couple and they want to preserve their money for the remainder of their retirement. You're helping them achieve that goal. Or if they're a younger individual and they want to grow their money over time so that they have enough to put their children through college, or whatever financial goals they have later on, you're helping them achieve that. And that's the benefit that I see out of a role in investment management and why I would choose it as a career.
No, and thank you. Thanks so much. I'm going to make a plug for the GAIN website as a great source of information. If you go to the GAIN, it's gainuk.org website. There's all sorts of hints and tips and reading material and podcast recommendations from the team. So I will just add to what Devaki said and plug the website as a great place to go and visit. So do check that out. And then to your other point, I think also what you're describing is almost like there's a purpose to the investment management. You know, as you say, you're helping people achieve their savings goals, you're helping them save for retirement. And I think that's that sense of purpose has been becoming more and more a key talking point for the industry across investment management. And particularly, I think when it comes to the sustainability issues and we can say sustainability, sustainable or responsible investing or ESG investing. There's some nomenclature preferences across the industry, but the question, I think I'm going to bleed into a question that's come up, and I'm going to hand it off to Lottie. Somebody's asked about the S and the G of ESG, and I wondered how you maybe could frame that, how you think about ESG or sustainable or responsible investing. What's your thinking on what that looks like?
If I remember to come off mute, the way I think about it is very simple. It's like, to me, it just seems really obvious. Like, it's good investing that you would take into account E, S, and G risks, especially at the moment, given kind of like literally the environment when it comes to environmental topics and regulation coming through and more focus on this from regulators. So for me, it's just really good long-term common sense from investors. On the question in particular, it's a really good one because obviously environmental is getting so much attention at the moment. And the social side in particular is the hardest to get your head around and measure. And there are far fewer kind of concrete data points that you can kind of pin your analysis to. So some of the examples, and I'll go back to Nestle because it's front of mind at the moment, and I've just spent a long time today looking at this. What we're looking at is human rights in the supply chain, specifically in the Côte d'Ivoire, where it's kind of famously for decades there's been kind of chronic child labor issues in that supply chain, and frequent examples of regulators trying to intervene and companies dodging left, right, and center. So the things I'm thinking about are what can we expect the company to do better? And like I'm not a human rights expert. I look at these issues across a lot of companies. I don't have the insight that someone on the ground might have. So it's part of my role to find the right people to talk to and identify people who work at charities or NGOs who are working in that area, who can give me that insight, who can tell me what we need to tell Nestle to do better. Other social topics that are kind of the more material that we focus on are things like data privacy and cybersecurity. Obviously, if there's a big well, we saw Facebook yesterday. We don't necessarily know whether that was a breach or whether it was just a technology hiccup, but things like that reputationally and in terms of revenue are incredibly damaging for companies. And other social things we look at are how they treat the workforce, diversity, kind of culture. If there's if we're looking at a technology company, we'll be looking for cultures that are innovative, collaborative, not bureaucratic. And as you can see, like those things are so hard to assess just from reading a company report. And that's when you have to get quite innovative in the way you do the research. And then governance has been looked at for much longer by investors. When you'll find that investors are much more comfortable on governance because they've been looking at it for a really long time. And the kind of things you're looking at there are, and it's very broad again, things like remuneration. So how are the really senior people in the company paid, and is that aligned with the business's strategy? And are there any potentially perverse incentives that pay scheme is creating? We look at who's on the board. Have they got the right skill set? Is there enough diversity on the board, or are they all from the same golf club and MBA program? I won't name the company where we found that to be the case. So what I would say is, when it comes, if you're doing ESG properly, ESG can be incredibly broad, and to not put it in a box. And there's so many kind of traditional like long-term business risks that have some kind of ESG flavor to them. So, really like think broad and think out of the box.
Well, that's great. Thank you for that. And I wanted to, all of you have talked about over the course of tonight, and I know we're kind of heading into the last 15 minutes, and I've got a couple more questions that have come up, but all of you have talked about the idea of, Lottie, you talked about research and reading and talking to people. Niamh, you've talked about collaborating across geographies and building in financial models and discussing with company management. Sherry, you've talked about understanding what your entrepreneurs are doing and having a sense of technological trends and being able to apply that to specific investments. And Devaki, you've talked about how you need to communicate, not just understand your clients' end goals, but then actually put that into, somehow translate that into a financial investment. There's been so much conversation tonight about conversation and communication, and frankly, so for some of the audience, it may be surprising, little talk about the quantitative. So I'd love to just ask the panel, and I'll start with Devaki, and we'll go the rest of the panel, maybe chip in, but what skills do you think are most important for you to do your job well?
I think in this industry, you definitely do need some numeric sense. You don't necessarily have to have studied maths or be the best in class and science, etc. But you need to have some sort of gauge with numbers. You need to be able to understand how they work, what's going on behind the scenes, etc. That would be number one. As much as all the other skills are important, when it comes down to finance, you do have to be fairly numerate. Other than that, I think in an office environment, it's important to be a team player. You have to be able to collaborate with others. From my perspective, this is not the industry where you work on your own. You have to be able to work in a team, bounce ideas off of one another, see what other people think, work with your colleagues to build models, build strategies, etc. So I think both the numeric and the interpersonal collaborative skills are important.
No, that's great. Niamh, what would you say to that? Or what would you add to that list?
I would say that investment management is a really big industry. So there is room for an awful lot of different skills to be able to flower and flourish. And that means people that are, excellent at interpersonal skills, people that are excellent at communication, people that are extremely quantitative and actually don't particularly like interacting with other people. And there are such people, and that's absolutely fine too. In equity research specifically, quantitative skills matter, but the magic dust, I think, is often creativity actually and imagination, because you're looking forward. So the combination of those two can make somebody a really standout talent.
Yeah, no, that's great. And I agree with you. I think there's a huge range, and I don't think there's one size fits all in this industry, is there? Sherry, how about you? What would you add to our list of the skills that are essential? And maybe we'll keep it personal. What do you think are the skills that are essential for you to do your job well?
Sure. I think compared to the other asset class, VC is relatively less quantitative, but of course you also have to, you need to know how to read a balance sheet, read financial statements. But I would say more importantly, it's your in-depth knowledge of a particular industry or particular technology trend. I saw some of the questions around fintech or interest in technology, or like specializing in technology or science in university. This will be great, because if you have a particular knowledge or interest or passion in a particular science area that other people are less familiar than you, then you definitely have an advantage.
And how about you, Lottie? What would you add to the list?
I would say, well, very similar to what everybody else has said. I don't like something we haven't mentioned yet, and I say this because there's a good question in the chat about confidence.
Yeah, definitely.
And don't feel like, never expect to feel 100% confident that you know everything. You've got in this industry, you get more and more comfortable as you get more into your career with accepting that you don't know everything, and the whole point of the role is to be open to new things and to keep learning, and to get your confidence from that rather than feeling like you're an expert in a really narrow subject.
No, great. Thanks for that, Lottie. And as we are moving into the last 10 minutes, maybe we can get into this idea of a bit more about the culture that there've been a couple of questions on the Q&A session, and I'd love to hear about your thoughts on culture and this is how you find being a woman in this industry that's generally perceived to be very male dominated. And again, why don't I start with Niamh? Maybe you could just give a little bit of insight there.
Again, I recognize that my journey is not necessarily the same as everybody else's journey, but I've been lucky. The firms that I have worked in have been fantastic in terms of team working, respect for everybody there, and an expectation that everybody will bring their best game, but doesn't need to bring the same game. There's a question in the chat as well about, is culture changing? I think it is. I think across asset management, maybe finance in general, maybe the corporate world in general, there is an increasing understanding that we are not employees, we are people, and we are people that should have a complete and whole life and everything that entails. So the trends that we're seeing in terms of parental leave are positive. The trends in terms of encouraging much greater emphasis on diversity and inclusion, these are all changes that I think have just started, and they're really positive in this industry and across corporates in general.
Yeah, great. No, I think that's super. Thank you for that. I think there's a question that's come up that says, where somebody's asked, how do you position yourself versus if you're not somebody who's kind of going through the traditional finance rounds, and you maybe come with a little bit of a different background. How do you set yourself apart, or how do you kind of present yourself as being hireable as maybe a private equity or an equity investor? I don't know. I'd love to hear, maybe Devaki, I don't know if you've got a view on that, having kind of come with this background. And then maybe Lottie, I'd love your view as well, kind of coming from a very different way into the industry.
I would have thought that if you don't have to necessarily have a traditional background to enter this industry, and if you are in the box that you don't, there are so many ways that you can learn more about the industry, as we earlier discussed: the podcasts, the books, there are newsletters you can sign up for, or even just like always checking the news, like Bloomberg. It keeps you in touch with what's going on, and you get more confident about the industry. And when you go for interviews, even if you do come from a background that's not traditional, you can show off your knowledge. You can show that you know about what's going on and that you're keen to learn more. And even if it's not something you studied before, it's something you want to learn more about and improve your skills in. So that's definitely something that you can show in interviews if you come from a non-traditional background.
Mm-hmm. Lottie, what would you add to that?
I'd really think about what your transferable skills are, and like be really thoughtful about that and be prepared to talk about it in interviews. So for me, with my classics degree, it was the ability to use lots of different resources and come to an informed judgment, and to be able to present that in written form. And that's exactly what my role is day to day. And then the second thing I do is find a book or a story or a podcast that really interests you. It doesn't necessarily have to be like obviously about investing, but so I'm fascinated by corporate scandals. So I love the Elizabeth Holmes and Theranos story, and I'm obsessed with the trial that's going on at the moment. So like pick something like that you're naturally really drawn to, so that kind of reading and learning about it isn't a chore. And something like that is almost certain to come up in an interview. A very standard question is, tell me something you're reading at the moment that you find interesting. And when you talk about it, it will be with genuine enthusiasm, and it will come across a lot better than maybe kind of forcibly reading a dry book about investing that you then regurgitate at interview. And interviewers can tell that. And that, for me, when we interview intern candidates, there's a big difference. What I'm always looking for is that genuine interest. So yeah, that's my advice.
That real passion, that intellectual curiosity really kind of bleeding through into the enthusiasm of the answer. Mm-hmm. I can see that definitely. So, and Lottie, you've kind of brought us into the final set of questions, and there's been some great questions on, what would you bit of advice would you give? And I really like to wrap up on this. Sherry and Lottie, you gave some great advice on how to approach interviewing and setting yourself apart and, you know, coming across as authentic and yet interested. Sherry, what would be the advice that you'd give somebody that's interested in either finding out more or really wants to set themselves apart as someone who's interested as a career?
Sure. I would say always embrace your diversity, and you know, don't see your non-traditional background or things that, you know, you may not have your top finance degree from a top university, but then always embrace your different background, because you can always turn that into your advantage. For me particularly, we in venture capital, again, as I've mentioned again and again, we really value diverse background, and we really value, you know, if you have a particular passion or knowledge in a particular sector or technology. So just find your passion, find what you like, find what you enjoy, and try to develop around that. In venture capital, there's always a space for you. You know, if you're interested in fintech, go for it, talk to me. If you're interested in biotech and you have some sort of like science background, join a venture capital fund that invests in health tech. There's always a space for you. And if you come from a traditional finance background, that's perfect as well, because we need a lot of people who do equity research, who do analysis on, you know, just financial analysis. So yeah, we welcome people from different backgrounds. Always embrace it.
That's great. Thank you. Niamh, over to you. How about you? What's the advice that you would give our audience tonight?
Sure. Don't be afraid to go for roles that are a bit of a stretch. Don't be afraid to go for things that you don't have exactly the right experience. But if you have the skill set, go for it and explain why you really want this and why you can do it well. And that will be it. The other one will be, don't be afraid to make mistakes. When you make them, own them and learn from them and then move on. That will be the other one. Can I just answer one of the questions in the
Sure.
chat, if you don't mind? If you were to go back before you started, what advice would you give yourself? Sorry, I'm going to give a very flippant one, but in my very early days in this industry, I thought, oh my God, I'm going to have to learn golf, because there were a lot of men and they all play golf. So yeah, you didn't need to worry about that. Sherry's point is exactly right. Embrace your diversity, be who you are, and just go for what you want to do.
Perfect. Yeah, I have no idea how to play golf, and I think I've got by okay myself as well. So Devaki, how about over to you? A bit of advice for the audience.
I would definitely say don't ever afraid to be wrong. Give your opinion, say what you think, and even if you're not sure if it's the right answer or it's the correct way to think about something, that's fine. You should share what you think. It's important that there's a diversity of opinions and ideas out there. So never be afraid to speak up or say what you think.
I like that a lot. And I think that's a really, I do like to say we are paid for our opinion in this industry, you know, so don't be afraid to voice it. So thank you for that. Listen, I would love to keep going, but we are just right up against 7 o'clock. So I'm going to have to, unfortunately, wrap up. I wanted to say a huge thanks to our 4 panelists for sharing their views tonight on why investment management is such an interesting career. I really hope that our audience has found it as insightful as I have. And there is a poll that you will hopefully see, and we'd really be grateful for your answering of that poll tonight, if you wouldn't mind. If anything that we've talked about tonight sounds interesting to you, please do check out the website gainuk.org or our social media channels. And where tonight's recording will be uploaded for starters, but there's lots of other information as well. And I would particularly point you to our Instagram and LinkedIn channels, where we share updates and work resources on a rolling basis. And I'd strongly encourage you, if you're in the audience and interested tonight, to apply to our internship program, which is currently open. I think we're just past the midpoint in the application process. So if you're interested in it, please do apply. The signups information is all on the website, or you can just email info@gainuk.org, which is our team on the ground. So with that, I will let you all go. Have a lovely evening, and thanks again to our panelists and to our wonderful audience. And we'll see you again next time. Have a great evening.
Thank you. Bye.